Good idea. Okay, so this is our um, chapter on cost where we started. I'll get to your question in a minute, Abdurrahman. Okay, so what we did in this chapter is we introduced why cost information is important. We saw 6 reasons why you need to have accurate cost data. Excuse me. Then we saw something called fixed cost, which does not change with output. We saw variable cost, which does change with output. When you put them together, we have our total cost, and using total cost, we can determine our break-even point. Break-even point is where total revenue is equal to total cost, where you're neither making a profit nor making a loss. We saw this graphically is this point here where TR is equal to the TC curve. Everything before that was a loss. Everything after that is a profit. The difference between your break-even point and your current output is your margin of safety. And we saw these 4 important calculations and we performed a few calculations: 1, 2, 3, 4, and then 5. We did all of these in class, and then we ended last week with a discussion on the limitations of break even, and even though there are these limitations, why break even is still important. Okay, now what I'm going to do is talk about a little concept of contribution, something that we've just seen in our calculations. And then I'm going to show you an 8-mark answer of a question on break even. Okay, so first of all, what contribution is, I want to explain that through a simple example. Okay, let's say that a business is producing a particular good, and to produce that good, their fixed cost is of $50. The variable cost was $2 per unit, and they're selling that product for $8. Okay. Now, what we know is that if you want to calculate contribution was simply my selling price minus variable cost, right? So for a moment, just assume that this bar here, the purple thing, represents your total earning, $8. Okay. If this is your price for something and you charge this for a product, obviously first you subtract variable costs from your selling price. So let's say the $2 variable cost that was there, if that is the first thing that you deduct from your earnings, which was your price was, you reduce this $2, you're left with this little portion here of $6 from this point to this point. Okay, this a little area, this region here is what we call contribution. And think about contribution as semi profit. What that means is whatever your price is, when we deduct our variable cost, we are left with something called contribution, right? But we know that total cost is equal to fixed cost and variable cost. So when you deduct variable cost, you've only deducted half the cost. In order to make profit, you also need to deduct fixed cost, which means that this $50 also has to be paid once you've paid your $2. So this $6 of contribution that we earn is basically that money that is used to pay your fixed cost. Okay, so with every unit you sell, for example, each unit you sell for $8, you first deduct its variable cost, you're left with $6 of contribution. With each unit, you have $6 in your pocket to now pay for your fixed cost. Okay, so contribution per unit is that amount of money which you save up so that you can pay your fixed cost. Remember, variable costs were already paid here at this point. Now, let's assume this company was able to sell 10 units of this product at a price of 8. When they sell it for 8, variable cost of 2, contribution of 6, if you have 10 units and at each unit you are making a contribution of $6, then 10 times 6 is $60. So again, what I'm trying to say is that if you sell 10 units at a price of $8, then with every unit you make $6 of contribution. And when you sell 10 units, 10 multiplied by 6 means you have $60 worth of contribution from 10 units sold. What that means is that Now, when you deduct your fixed cost of $50, remember this is just coming straight from there. So whenever you then deduct your fixed cost of $50, you will end up with a profit of $10. So simply put, contribution is that amount of money that you set aside to pay your fixed costs, which we did here, which will then guarantee that you are left with a nice little profit in the end. So simple concept, simply put, contribution is the amount of revenue a business has left over after it has paid off its variable cost of production only, which we saw here in this formula. Sales revenue minus variable cost. So for example, if we sell something that the variable cost was 150, let's say labor and material put together, and you're able to sell it for 230, 230 minus 150 is equal to, excuse me, minus 150 is equal to $80. So from this one unit, you were able to save $80 of contribution, which you can then use to pay your fixed cost. Is everybody okay with that? I would also like to show it mathematically so we understand what it means to pay your fixed cost using contribution. Okay, so let's say there's a business that makes three products, shelf here, table, and a couch. They're able to sell it for these amounts. They seem expensive, but okay, 10,000, 15,000, whatever. And we know that your contribution, right? Contribution is your revenue minus variable cost. So revenue minus variable cost will lead to contribution. So again, 10,000 minus 4,000, you have a contribution of 6,000. 15,000 minus 4,300, you have a contribution of 10,700. 50,000 minus 18,500 means you have a contribution of 31,500. So these numbers here are the contribution that you have from selling these units. And when I put them all together, let me just erase this part here so we can do it. When I put all three of these together, right, this number, excuse me, this number plus this number plus this number, I have now a total contribution of what I forgot the number, what it was. Let me just calculate this quickly. 6,000 plus 10,000, 6,000 plus 10700 plus 31500. So I have a total contribution of 48,200 from selling these products. Once I know that I've already deducted my variable cost, look, this variable cost I've already paid here, I've paid it here, I've paid it here. So the only way to know if I'm going to make a profit or not is now to deduct my fixed cost. So then in terms of my profit, this become my contribution of 48,200 minus 42,500. Once I've paid my fixed costs as well, I am left with a profit of 5,700. Okay, so the important thing to understand here, and I really want you guys to focus on this one, is that whatever you earn, this revenue bit here, first you deduct the variable cost. Whatever you have left with, you use that to pay your fixed cost. So if I can just show this sequence here, you use it to do this, then to do this, then you deduct this, and only then do you know whether you made a profit or a loss. So contribution is an important concept. It simply tells you how much ability do you have to pay off your fixed cost. Remember, you still have to pay your fixed cost whether you're producing anything or not. So if you are able to pay it off, then only you have your profit. That's where contribution is important. Okay. Now, in your exams, it's not the way they test you on contribution is not too complicated. They might ask you for this simple calculation, or they might give you one of two scenarios. It's only these two scenarios that come in your exam. Okay. One is, what if that we made something and we are asked to sell it at a lower price. So first, if a price offer is that you receive for your product is below your usual price. So here, if you look at our example, you usually sell this cabinet for $230, but somebody comes in and says, well, I'll give you 200. But he makes the deal a little bit sweeter. He says 200, but I'll buy 10. So in a way, we're able to make $2,000 right away from this deal. So the question becomes, do I just sell one at 230 and hold on to that profit? Or do I sell 10 but at a lower price and make 2000? Okay. Now, in making these 10 units, some things that you will have to consider would be, well, will there be higher variable cost? Of course, you'll have more wood, you'll have more labor, so more direct costs. Will it result in higher fixed costs? Maybe you'll have to rent a warehouse, and that means that there is a cost to it. You will also have to see that you have the capacity to produce or not. Remember, if you have the leftover resources to make this extra 10 units or not. But at the end of the day, the simple rule of contribution, and remember, this is what you have to show in your answers, that as long as there is positive contribution, as long as there is positive contribution, you will go ahead and accept the order. And again, I'll just show you how this worked. Remember that our contribution was selling price minus variable cost. When I do it for this example here, I remember that my selling price was 230, my variable cost was 150, which meant that I have $80 of contribution from selling one unit, right? We saw this example a little bit earlier. Now what the situation is here is that they're asking us to sell it for 200. Our variable cost did not change. I have less of a contribution. However, remember the rule is as long as it is positive, we can see that 50 is still a positive number. As long as it is positive, you will accept the order, you will make 10 and you will reduce your price to 200 because there is positive contribution. So contribution is used to decide on whether to make something or not. And the decision to make something or not depends on the amount of contribution. As long as after deducting your variable cost, you are left with some form of contribution. Remember this $50. Where does this go? This $50 is then used to pay your fixed cost. So if you didn't get this $50, you'll have to borrow it from somewhere else, and that becomes a problem. Okay. So remember, even if someone offers you lower price for your product, first calculate it according to contribution. If there is positive contribution, you go ahead with that offer. Even if this was one unit, even if this was one unit, you're still making $50 worth of contribution. You will still go ahead and make that order. Okay, so remember the rule. Positive contribution means you accept it and you go on. Okay. The same is also true if you are getting, obviously this is an easier decision to make, but if a price offer was above your usual selling price, okay, somebody comes in and says 230, well, I'm willing to pay 250, but I want some extra work done on it. They said I would like them all in black, maybe put in gold handles, put wheels on it, whatever you want to do with it. Let's say they come up with some extra demands. The process remains exactly the same. Yes, there will be some increase in variable cost. You may have to rent some places, there'll be a fixed cost. You'll have to see whether we can make these extra 10 units or not. But as long as there is positive contribution, you go ahead and accept the order. And again, in this case, the math becomes easy. 250 minus 150 variable cost means my contribution this time is $100, which means it is positive. Therefore, you will go ahead and accept the order. Even if it was one unit, even if it means you have a lot more work to do, even if it means that you have to get more paint and do all those things, even with all of that, as long as there's positive contribution, you go ahead and accept the order. Questions, please. Okay, so before I finish, by the just the end of the chapter on costs. Okay, the contribution part was the last bit. What I want to do is just show you a way to answer an 8-mark question on the topic of break even. So, as you can see here, the question is an 8-marker which says analyze how business might use break-even analysis when planning to launch a new product. Okay, now the first thing that we always do with 8 markers is divided into knowledge, application, and analysis. Let's identify the words that give us those clues. And for knowledge, I know they are asking you about break-even. So that's clearly break-even. As long as I talk about that, I get marks for knowledge. Application is a particular situation or a particular business. So here they are planning to launch a new product. So new product, as long as I'm talking about that, I will get my marks for application. The analysis is how do you use it? So the uses or the benefits of using break even is what you have to show in this question. So simply put, when you're launching a new product, if you're using break even, what are the benefits? So this sequence is what you have to show in your answer, right? So given this information, I had written an answer. So let me show you here. Okay. Now you always start off with a nice definition and make it at least 2 layered. And here the question was obviously about break even. So I'm going to start with that. So break-even analysis is a financial tool used to determine the chances of attaining profitability of a new product or a business. Okay, so again, break-even tells you whether you will make profit or not. That's what I'm saying. It's also important to explain when that point comes. So it occurs when the total revenue of the business is exactly equal to its total cost. At this point, the company is neither making a profit nor making a loss. So nice little chunky definition taking care of part of my knowledge marks, not all of them. Remember, more other knowledge marks are gained by talking about the use here that the questions asked me for. So remember they asked me how to use break even for a new product. So first line, you always mention it as a fact that what's the benefit, what's the advantage. So when launching a new product, the break-even analysis can help to determine the profitability before actually taking it to the market. So this again is something that you would see in your notes, whether you have seen in my lecture slides, whatever you read, among the advantages, you would have seen that well, it's used to see whether to make a product or not, whether to take it to market or not. So mentioning that clearly as a fact is what's going to get you part of your knowledge more. So don't forget to do that. Then you bring in your application, which is here the blue part. So for example, when launching a new product, it helps to calculate the required quantity needed to be produced and sold in order to make sure that the product gets out of its introduction stage without needing additional finance. So again, I'm creating the situation that you want to know how much to make and how much to sell. Remember, the cost and revenue side must meet. And that way, if you're able to do that, you can get out of your introduction stage. Remember, new product always starts in its introduction phase. So here I've created a scenario of the launch of a product and how break even is being used. The benefit of it, the analysis part is in turn, break-even analysis can serve as a planning tool, which helps the company to allocate its resources better, setting itself on track for profit later. So what this means is that once you know how much to produce, you will know how many resources to bring in, and how much to sell means how much earning you will make, and that will tell you whether you'll make profit or not. So whatever we've learned, apply it to a new product scenario and then close it like that. I've written a second paragraph here. Break-even analysis can also be used to judge the level of risk associated with new projects before deciding to which project to pursue. So if you have 3 or 4 different products, which one is going to be most profitable, you can do break-even for all of them and then decide which one will reach break-even first, which means that it will reach its profitability first. So, for example, banks and investors will need some financial projections before providing product finance for a new product launch. And this is obvious. If you're going to launch a new product, you'll have to develop it, which means you need money. So, money could come from banks, could come from investors. They would want to know whether your product has any chance of success or not, and break even helps to give that give that picture. So break even can help to assess which products are more likely to become self-sustaining sooner, which means become profitable. This can provide the assurance needed for investors to invest in the new product launch or the bank to give you money because they would see that the company will at some point start making a profit. So that's just the last bit on this. Just want to show you that the importance of using business words, the importance of your right structure, the fact that you should be able to identify this is knowledge part, again a bit of knowledge here, application, and then analysis. Same thing here, knowledge, application, analysis. You do all of this, then you're able to answer a full 8 marker property. All right, any questions? टेस्ट की डेट्स आ गई हैं? आई एम नॉट श्योर if टेस्ट की डेट आ गई है. Does anybody know?